This is Matt Russell from the FX Power Course, and welcome to the DailyFX walkthrough.
So here are the four pairs that I will be discussing this evening: the Kiwi dollar, Aussie dollar, the Euro dollar, and the dollar yen. So let's go ahead and pull up the charts. The first chart is the Kiwi dollar. This is an hourly chart, and this is the channel that I had been using for the past, I would say, about 10 or 11 reports now. And I was expecting a downside resolution to that pattern. That's what we have. I mentioned yesterday that we might take profits just above that 56.60 area and hold the rest of the position. Right now, I would recommend, personally, I'm covering everything at this price level right now. We could hold a little bit longer. If I'm looking at this chart now, this looks like a ABC correction. This was the B wave here, and right now we could be in the C wave lower. This is a 1-2 of that C wave, so this could be the bottom of the third wave. So there is a chance for another additional low, or at least a prices to come down to test the low over here, 54.57. But I would say that this move is pretty much over in terms of the easy gains, which was the breakout from this pattern. And with that being said, if you get flat now and prices do make a new low, at that point I might personally look for a reversal to the upside. The next chart is the Aussie dollar. Not much has changed here. As I mentioned yesterday, I was abandoning the trade idea of this simple support line, as a lot of the simple support lines on the daily charts were not holding. So right now I'm still just in a holding pattern. Personally, I would look for a move back to the previous support line, which might now act as resistance. With that being said, there's no real clear risk-reward entry, so I might pass on this pair for now. And again, this is the daily chart. The next chart is the Euro dollar. As I mentioned yesterday, I was also on the sidelines with this pair as well, as prices did close beneath that short-term support line. So looking at the pair now, what I see is that there could be a chance for a reversal right here, just beneath the 61.8 at the 32.40 area. Right now, prices are below that area at 32.10. So let's go ahead and pull up the hourly chart for the Euro dollar. Zooming in a little bit here, and I've added some simple resistance lines and simple support lines. So moving forward, as I was mentioning, I do expect at least there's a good chance for a rebound here. The same thing with the Kiwi dollar. You could argue that this is corrective right now, and that there could be a resumption of the trend that was established by the rally from 125 to 147. But there's no good risk-reward entry. But moving down to this lower time frame right here, if we can get an entry close to the low of yesterday's session, placing our stop beneath this white support line on the bottom, that could be a good risk-reward entry. And again, you know, the upside to this trade, if you get in anywhere near the bottom here, could be substantial. So while the trade idea is a little thin, the reward is very high. So look for ways to keep your risk low for long trades on the pair right now. And I'd get a lot more bullish if the pair can at first get an hourly close above that 61.8, which again is at 32.40, 132.40, and I would get a little more bullish certainly if there's a daily close above that 61.8 near 32.40. The last chart is the dollar yen, and as I have been mentioning over the past several reports, I was waiting for prices to come down to this line, but this line did in fact fail. And the same thing here, in that I really don't see any risk-reward entries, so I might give this another day, see if anything sets up on the shorter time frames as well. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.